Today let's start with A16 borrowing cost. Now let's start with a question. Can any cost to be added to the cost of asset? The answer is, as per A16, the borrowing cost should be added to the cost of asset. Now the point is, what is borrowing cost? Interest and other costs incurred in relation to the borrowing of funds. Now the point is, what is the interpretation of borrowing cost? Let us understand. Interest, related charges, amortization of discount, finance charges in case of finance lease, amortization of ancillary cost, exchange difference in case of foreign borrowings. Let us understand about these costs in the problems. Now the point is, what is the type of asset to which the borrowing cost must be capitalized? Now the answer is, as per A16, it provides the definition of an asset which is qualifying asset to which the borrowing cost can be capitalized. Now let us understand what is meant by qualifying asset. Now let's understand what is a qualifying asset. A qualifying asset is an asset which takes necessarily substantial period of time to get ready for its intended use or sale. For example, an asset which is intended for use or sale immediately after acquisition is not a qualifying asset. For example, if the plant and machinery is intended for use at the time of acquisition is not a qualifying asset, but the qualifying asset means when we acquire a plant and machinery, it must take a substantial period of time to get ready for its intended use or sale. That is what is meant by qualifying asset. Now let's understand what is substantial period of time. Substantial period of time depends on the circumstances and situations, but generally it is taken as 12 months. Now let's understand an important aspect, when to start the commencement of capitalization. First of all, expenditure incurred on the capital asset or qualifying asset, and second point is borrowing cost being incurred. Activities that are necessary to prepare the assets for its intended use are in progress, are to be considered while commencement of the capitalization.
Now let's understand the use of capitalization. For example, NS Builders Private Limited is a construction company is constructing a building. A16 provides that balance sheet reflects the true economic investment in the asset. This means instead of immediately recognizing these borrowing costs as an expense on the income statement, they are to be added to the cost of building. This implies NS Builders Private Limited not only spent money on materials and labor but also incurred financing cost to fund the project. This indicates that the cost of building must include total cost incurred on that project. Either it may be cost incurred on materials or cost incurred on labors, as well as the cost incurred by way of borrowing cost. This will represent the true cost of a building and it helps in the correct valuation of the asset. Now let's understand what is the impact on financial statements. Capitalizing borrowing cost has the following impact on the financial statements. It is increases the value of cost of asset, which represent by capitalizing the borrowing cost we'll get exact value of the asset, and the use of capitalization in this scenario aligns with the principles of A16, which aim to ensure that the cost of asset reflects not only the direct cost of acquisition or production but also the financing cost incurred to bring these assets into their intended use. This approach provides a more accurate and comprehensive representation of the company's financial position and performance. Let's take an example. NS Limited has taken a loan of $10,000 on 1/4/2001 from a foreign source for a specific project at an interest rate of 5% per annum. The exchange rate on 1/4/2001 was 45 per US dollars and on 31st/3/2002 was 48 per US dollars. The corresponding amount could be borrowed in the local currency at 11% per annum as on 1/4/2001. Now let's understand. Interest for the period in case of foreign borrowings is 10,000 US dollars into 5% into 48 per US dollars will get 24,000. And in this aspect we'll have increased in liability towards principal amount due to differences in the exchange rates, that is US dollars 10,000 into 48 minus 45, which is 30,000. Now the point is, we know that 24,000 interest must be capitalized as borrowing cost. But in this 30,000, how much amount must be capitalized as a borrowing cost? For this, we'll calculate primarily interest that would be resulted if the loan was taken in Indian currency, which is 49,500. As we know that if the borrowing was made in Indian currency, we would have took 49,500 as the borrowing cost. As we have made a foreign borrowing, so we'll have 24,000 interest plus. So taking interest on Indian currency as a base, we need to calculate difference of 49,500 minus 24,000, which is 25,500, should be taken as an borrowing cost in the increased in liability towards principal amount, and remaining amount should be charged to P&L account as foreign exchange loss.